switched directions, and it went down. Now, it was kind of surprising to me this morning when who was it? Jesse, I think, said, "When did you get that new indicator?" And I said, "Man, this thing's been here for years. It's been on the charts for years. I just haven't been talking about it because I want everybody to get in their minds that if you have something that works, you don't need to change it. Now, we've added to stuff, but we haven't taken away from stuff. Okay. Maybe in a little while, Alex. Okay. All right. So with that, we got 8 ticks. We got 8 ticks on the ES, 5 ticks on gold. We lost 8 ticks on the euro, and we made 10 ticks on crude. So we're up $200 a contract on the morning session. And let's see. Let me go back here. That's what I just said. -8 on the euro, plus 10 on crude, plus 5 on gold, plus 8 on the ES. $200 a contract. Today it took 15 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract. And we took a total of 4 trades. So on the month, we're going to end the month with plus $6,080. That's over 20 days, averaging $304 per contract per 2-hour day. And as I just showed you, I missed most of the trades. And that's only doing the trade setups that we normally do in the morning session. That's not adding in all the other ones. On the year now, we're at $36,415. That's over 98 days, averaging $371 per contract per 2-hour day. Okay, now, if you have not taken a free trial with us and you want to take a free trial with us, go to the home page at CFRN.net and just go down here to where it says free 5-day trial, no credit card required. Click on that and you get a whole bunch of information in here. Not too much. It won't be overwhelming like our regular web pages. I'll just give you little bits and pieces. In here, all we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge, so we can tailor one-on-one training just for you. And if you hit the send button, you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you got to do that. Okay, and with that, we can pass it back to fabulous Phoenix, Arizona. Studio A, overlooking South Mountain, America's largest city park.
All right, good afternoon.
Good. Is everything okay over there?
29th day of May. I'm sorry?
Yes.
What was that?
I said, is everything okay over there?
Oh, yeah, I don't know, just some ghost in the machine. I don't know. I assume it's working now. I guess if you can hear me, I guess that's better than it was before.
I can hear you and I can see your screen.
Okay, so. Fantastic. And I just heard you do the recap of the recap, so I won't have to ask you that question today.
Okay.
All right. All right, guys, let's just dive right into it. We'll start out with the S&P 500 daily chart. Okay. We all know about the bearish cross that took place on February 27th. Now, this bearish cross did not cause a pandemic sell-off. What this bearish cross did was it confirmed to us that we should be looking for substantially lower prices. We're on a daily chart. Our first indication was price closing below the BBC. You notice it's not even touching it. So we got a gap lower open there on the daily, and then we closed substantially lower. And then here we got the bearish cross. So this puts us on alert. This confirms it. This tells the story. Now, then the pandemic crash sell-off came to an abrupt end on March 23rd. The bearish cross price was 32.72. The swing low of the sell-off was 21.74. When price found support and it couldn't trade any lower, there was more bullish pressure than selling pressure. more buyers than sellers. Okay, it's that simple. You can spin algorithms till the cows come home. You can run multiple indicators and oscillators and all kinds of stuff. You can have people scurrying around with clipboards and looking at big screens, and putting their heads together and, having breakout conferences. And you can do all kinds of stuff. Or you can just look at a chart. I mean, trading's not easy. Don't ever want to imply that it is. But it really is as hard as you make it. Because it can be simple. Unfortunately, there's not a lot of people out there teaching you how to make it simple. People teach you how to make it complicated so that you are dependent upon them for information, for signals, for the latest, hottest, slickest indicator to come down the pike. And we use stuff from the 13th century, like fibs. We read candlesticks like the Japanese rice traders did 400 years ago. Okay? The new shiny object in the room just doesn't get our attention. As Michael said earlier, when something's not broken, there's no need to fix it. So the chart always tells the story because each one of these candles is a graphic representation of investor and trader sentiment for whatever time frame and market you happen to be observing. Okay. So from the bearish cross to the swing low, when price could not go any lower because there were more buyers than sellers at this price, that drove us up to the BBC, where we expect to find resistance. We did. That resistance sent us back to support, which sent us back to resistance, which sent us back to support. And this time at support, you'll notice here we had the step line for support. But more important, here we had blue and climbing for support. So we rode the back of blue and climbing until we did something very important, close above the BBC. Because from this candle, we're looking for lower prices, right? From this candle, we're looking for higher prices. The market has a tendency to fall faster than it climbs. Financial gravity, I guess. Now, first we poke our head above the BBC. That tells us to look for higher prices. Then it's confirmed by the bullish cross. We trade up to resistance, back to support. And then this was already highlighted on the chart. Those of you that watch the show every day, you know that these lines were put in long, long ago. And those of you who might be new to the show, every show is archived at youtube.com/CFRN. So you can go there and you can scroll back a week, a month, 2 months, even a couple of years, and you can see every one of these shows. And, parts of the show are relative to the day that the broadcast is made. But when you see me start dragging up the Concierge Trade Alerts or the Logic Alerts, and I'm going into the full-blown deep recap of what happened since the previous show, that's where you might want to hit pause, okay? Settle in, because for about 15 to 30 minutes, you'll learn some things about trading that I think you'll find very beneficial. Nothing complicated, nothing difficult to understand. Our curve curves toward simple, not complicated, not convoluted, and at the end of the day, not horribly expensive. Okay? All right. So we're above, we hit the resistance area highlighted, we come back to support. The day that caught me a little unaware was this one here. Out of all these candles, this is the one that I did not have this audience prepared for. But we found resistance, and that can happen. Support and resistance can pop up out of nowhere. Okay? And right here, where did it do though? It fell right back into formation. It sent us right back to the BBC, which sent us back up to resistance, which sent us back to the BBC, which sent us back up to this newfound resistance, right? Where we spent 1, 2, 3, 4, 5, 6 sessions trying to break through it. We finally did. We traded above it 1, 2, 3 sessions. Yesterday, we ended with a daily doji. Now, the doji, if you Google The Secret Life of Candles, CFRN, it'll lead you to a PDF I created in 2012. I've changed nothing in the PDF since 2012 because what's in that PDF is based upon something created by Japanese rice traders 400 years ago. So certainly no need for me to try to improve upon their work. It has stood the test of time. So this is a very important candle. It is a doji. If you download that PDF, you can do it. It's free. You're welcome to enjoy it. Now, price has today pulled back to blue and climbing. And the step line. You see how they're joined at the hip there? Now, here's what's going to happen. Either we're going to hold here, and if we hold here, we'll go back to challenge this high. If we're able to take out that high, then our next area of resistance is already highlighted on the chart. If we fail to hold here, now take a look at how far price pulled away here before it pulled back. How far did it pull away here before it pulled back? How far did it pull away here before it pulled back? Now, I suppose some people might say we're overbought. We don't use the terms overbought, oversold, because those terms don't really tell you much. A stock can be overbought for days, weeks, months, years. Honestly, it can. Same with oversold. But what we do know is that each market has what's known as its average swing. The average swing in the S&P under normal conditions is 3 to 5 points. That's right. And every market. And I teach all of our traders how to go to their favorite market and how to determine what the average swing is. It's not anything complicated. It takes a little time, takes a little work. You got to understand basic math, but it's something you could learn. That knowledge is very valuable. Okay. Now, that's on an intraday chart. Daily chart's a different story. This move, let me just, from above the BBC, there's the length of that move. Okay. And there's that move. Get that in the right spot. I'll just take that one out for now because I moved it. I don't want to take the time to reposition it right now. All right. So we're not dealing with that at the moment. Okay. So you see this one, that one, and now this one. Okay. And you don't have to worry about it. You know, did I get that exactly perfect? Because it's an area. Okay. We have completed a typical swing. This doji, you know, a couple days from now, we might look at that and go, wow. So price either will reverse, take out this high, go to the next area of resistance, or at this point, the highest probability looks like we're due for a pullback to the BBC. Price always reverts to the mean. In our case, the mean just happens to be green. Okay? Price if you remember that, price always reverts to the mean. Okay? And the BBC holds more often than it doesn't. So, the high probability move from here, if we trade below the low of this day, or even this day, I mean, they're really close, then price comes back to 29, 20, we'll call it 29.30. So we're talking about a potential 70 to 80 point drop in the S&P, which translates to a 700 to 800 point drop in the Dow. Is that a forecast? It is and it isn't. Okay. I want to see how today closes. If we close on the lows of the day, then I would expect continued downward movement on Sunday night on the Globex Open, which, by the way, we open for business Sunday night, 6 p.m. Eastern. That's when we start issuing alerts in our private Telegram channel, Logic 247. Every alert is based upon logic. In other words, you understand how markets work, which is what we teach you. And the alerts come out around the clock, 24/7, from Sunday night at 6 p.m. Eastern until Friday afternoon at 5 p.m. Eastern. Okay. So we close at or near the lows today. Sunday night, that creates the potential for us to continue, and we'll look to find support at the BBC. Once we do that, then the high probability move is that. Okay. Now, if we reverse somehow and take out this high, we already know where the next area of resistance is. If we pull back to the BBC and it fails to hold, right? Hold on, please. I'm sorry. All right. So if price pulls back to the BBC and it doesn't hold, then we've already highlighted the next area for potential support right here. So what the daily chart does is it provides you with a roadmap so that you can then go to the intraday chart and navigate and put on and take off trades. Okay. Now, the S&P has done exactly what we expected it to do. Last night, before the workshop, I had traders and trades, and I posted this in the discussion group, shared it in the workshop. You see this bullish cross? That represents potential support for this falling market. And if you draw a straight line, you'll see that that bullish cross lines right up with that swing low. Now there was another layer, and that was from this low to this high. That was also a 50% Fibonacci retracement. So my guys that were short, I said, hey guys, you better take profit because I think we're coming into support. We did. We watched it bounce during the workshop. It went back up to the BBC, and we expected to find resistance there. When you approach from below, resistance. Resistance will send price back to support. Blue and climbing equals support. Blue and climbing sent price back up to resistance. Resistance sent price back to blue and climbing. This time we got below it. We touched the BBC one more time, and then down we came again to that same area. Okay. Now you'll notice there's a slightly higher low on this candle. Why does that happen? Well, those who enjoyed this ride up, if they were willing to buy at this price before, if they thought that was a good price, quote unquote, should be a good price again today, right? So sometimes they'll buy the ticket early. So when you're trading support and resistance, which is really the only smart way to trade the market, just my opinion, don't always expect it to come back to a particular price point to the tick. Because if buyers are hot to trot, they'll come in early, and you won't quite get to that exact swing low. See? And the candlesticks on your chart will just make that evident. So buyers come in, they run it back up to the BBC and the 38% fib. Anytime you have two things coming together, that's good. Okay. We often have 3, 4, 5 things coming together. I always point those out to you in the discussion group. We find resistance, right? Resistance sends us back to that 50 again. This time, price makes it through the 50. And last night in the workshop, I said, guys, if we close below the 50, then we should be able to make a run to the 62 fib, which we did. We found support. It bounced us to the 50 in red and falling. Red and falling represents resistance. So down we go. This candle opens, and the last alert that I put out before coming on the show today, I'll share it with you. I'll share them all with you, but I'll show you this one right now. I don't know if Valerie's had a chance to recap it yet. She's been busy this morning. Okay. Now this is Pacific time that you see on the screen. I'm in Phoenix. Arizona doesn't do daylight savings time, so 8 months out of the year I'm on Pacific time. So at 11:19 a.m., I said consider being short 29.98. I should have said 29.96. Everybody knows that it's always a 2-point target. And then the final trade to target is the weekly trading zone below. So you see what we're doing, the idea behind the trade is we wanted to get below this swing low and then just ride that baby down to the weekly trading zone. Now the swing low of that candle was 29.92. As I've always taught you, weekly trading zones are an area. Fibs are an area. Support and resistance is an area. Yes, I have to put, a specific price to define the area. When you draw fibs, it's going to give you a price where that 50% fib lies. But if you take nothing else out of the show, remember this. It's an area, okay? So, the premise of the trade again, we take out this low. We've got nothing in our path. Right down at the zone, okay? Buyers came in 1 point. The low of that candle, again, was 29.92. See it on the screen? Buyers came in 1 point above the weekly trading zone. That happens. Now where are we? We're right back up at this area that last night I made sure everybody know, take profit because we're coming into support. Support. This time it didn't hold. Obviously there has to be a point where something, whatever that something is, doesn't hold. Otherwise you'd have a flatline market. So price comes down, finds support at the 62, it bounces back to the BBC, sends it down to the weekly trading zone. Support sends it back up to look for resistance, and that 50% fib, which is also where this bullish cross took place, is again acting as resistance. So that same alert has every good possibility of panning out again. Important prices, important areas are almost always tested. So as this red candle comes down, gets below that 62, gets below that swing low, very, very possibly make a ride right back down to that weekly trading zone. Okay? All right, I wanted to show you that because that was fresh out this morning. So now, let me give you a recap of all the logic trade alerts for the week. Okay, just give me 1 second. Gotta format this thing. For some reason it doesn't. come out right straight away. But I'll fix it so it looks pretty. All right, here we go. Pretty as you can make plain text. We are in week 95. This recap is current as of 1 p.m. today. Yesterday at this time, we had a total of 54 alerts issued. Today, we're up to 68. Yesterday, we had 9 that never triggered. We were waiting on 5. We had 40 actionable alerts. 5% were stopped out. That's a low number. Think of the weight loss ad on TV. In tiny print at the bottom, when they show the before and after picture, it says this is not typical results. That's not typical. Typical is 20% over the last 95 weeks. Today's recap, current as of 1 p.m. Eastern, we've issued a total of 68 alerts, just like the one I just showed you. Okay, 14 never triggered. We're still waiting on the results of 6. That gives us 48 actionable alerts so far this week. 2 have been stopped out. 4% of actionable alerts stopped out. Again, that's not an average, that's not a typical number. What we've averaged over the last 95 weeks is 20%. Now I'm going to bring up the Concierge Trade Alerts. Now that was the logic results. Logic is based on current price action, what's happening right now. That's why it operates 24/7, live around the clock. The Concierge Trade Alerts, that's a static report issued each evening shortly after the Globex Open. Last night they came out 10 minutes after the Open, 6:10 p.m. Eastern. Okay, if you want to grab a screenshot, best way I know to do that, you may have your better way. I use the snipping tool. I always keep it parked down on my toolbar. So when I want to use it, I just click it on the taskbar. New. Hold down the left mouse button. Drag it across the image or whatever it is I want to capture, a web page. Release the left mouse button. Now I have an image that I can send out as an email. I can copy it to my clipboard. I can save it as a file. Okay, all right. So hopefully you've had a chance to grab your screenshot if you would like one. So on the S&P, the alert said, consider being short 3010. And 3010 is right in here. $30.10. Okay, so the initial drop took us down about 8 points at $50 a point, $400 per contract traded. Important prices, important areas are almost always tested. We go back above the trigger. The next time we drop from 30.10 down to, we'll call it 3004, so that's 6 points on that trade. At $50 a point, $300 per contract traded. Then price gets back above the trigger, does it again, and this time we go from 30.10 to 29.92. That is 10, that's 18 points. Alexa, 18 times 50, please.
18 times 50 is 900.
Okay. $900 per contract traded. That is what the market made available. Okay. That one alert gave you 3 trades. So when I tell you that we had X number of actionable alerts this week, chances are each one of those alerts triggered multiple times. We only recap the first trigger. Trying to recap the second trigger and the third trigger, it just gets too confusing. But you as the individual trader, when you find an alert and a price and a setup that's working, you'll be amazed at how many times it repeats itself. Okay? As I told you, I expect, unless price gets above the BBC, This trade that just paid out $900 per contract traded to whoever was in it, I expect it to repeat itself. Now, once you've earned the right to trade 10 contracts, that becomes a $9,000 move. Let me explain what I mean by earning the right. Let's say you're a captain of industry. You had a successful business. You've retired now. And you've got money put away because you've always wanted to learn how to trade. So you put that money, some of that money, in a brokerage account. Does that mean you've earned the right to trade 10 contracts? No. You haven't even earned the right to go live yet. What do you mean? I want to be a trader. Okay. Best way we know of for that to happen is outlined in our 24/7 blueprint. You put together 10 consecutive days in a row in SIM where you reach your goal, 10 trades or less. Then you get the green light to go live with one contract. Then your goal is to increase your account balance by $2,000. Then the blueprint gives you the green light to add the second contract. If you follow the blueprint, when it's time to add number 3, number 4, number 5, number 6, you're always adding the next contract with profit you earned in the market. Because if you don't have profit, then you should not be adding contracts. You should be going back to SIM. You should be booking a mentoring session so that we can help you figure out why. That's what we do. Now, John just popped in, so we're going to hold up on the recap right now. We'll have a quick conversation with John, and then in just a few minutes, we'll be back to the recap, and we'll get that wrapped up for the day. We'll go through every one of the Concierge Trade Alerts as we do each and every day here on the show. Hey, John, welcome to the show.
Hello there. Thanks very much for bringing us on. Well, it's been an interesting day so far. We kind of went negative on the markets yesterday afternoon, and so far we've come in. However, I was expecting a bit of a rebound, which we got a short while ago. And Tesla, you know, with the launch tomorrow, Tesla sort of opened down, but it's actually rallied back up. It's not on fire yet or anything like that, but it's, you know,
Unlike Minneapolis.
Right. If you you know, took what we were saying a few days ago, which is to basically buy the dips on Tesla, you could have done pretty well. You know, if you buy the dips and sell the rallies, and sort of traded.
John, your volume just trailed off. I can't quite hear you.
Okay. Sorry. Is that yeah? Is that better?
Yeah, that's better.
Okay. So you know, everything's working well. The machine, you know, the new machine with all the upgrades. It's working great, and I figured out some new ways to display, just so I can keep a handle on 3 or 4 moving targets, you know, early in the day, because yesterday we had ABIO, which, as you remember, I was around about 15 or 14 or 15 when we talked about it. It ran up to about 20, 21 or so, 20, 21, and we got out at 19.5, and it went down. It's down overnight. Actually, it's down to about 12.5 right now. So that turned out to be a pretty good trade. You just never know whether these things are going to hold up or whether they're going to get taken apart. And this one got taken apart, but it did give us a pretty good sell signal right at the top. And strictly speaking, should have been a short, you know. So I mean, it's, you know, when the thing's been up a couple of 100%, it's a pretty good short usually. And actually, it was an excellent short, and it tanked substantially. So if you really, you know, once my
advice, you know, my daily, John, real quick. Yeah, this is the one we discussed yesterday, guys, about when you see these parabolic, you know, rocket ship type moves. Typically, I mean, if you can jump aboard, you know, at the beginning of the journey and ride it up, that's great. But you should always think about taking profit, because this thing went from $8 to almost $24. Well, it made it to $21.79. Looks like almost $22. That's a huge move. When a stock doubles or triples in a day, the chances of that holding, I don't care how great the story. When some people, when some key people who knew something was going to come out that was going to cause this to happen, you better believe they're up here taking their profits. And the following day, you see this. In fact, honestly, I'm surprised to see it holding at the halfway point. I'm surprised it's not back down here, trading where it had been consolidating quietly for, gosh, a very long time.
Well, when we went into this in the morning, around about the 8 level, just a little bit above the 8, I obviously figured that it had a chance of going higher because it was a pretty big deal, announcing these clot busters, if you like, the things that could potentially minimize the clots or even eliminate them. And by the way, if you were keeping tabs on Dr. Zelenko, Dr. Zen Zelenko, the physician who really got Trump on the product. Look, all these people who've been trying to badmouth hydroxy. There was a guy on Laura's show last night, very competent guy. I think he's a hematologist and a cardiologist.
John, your voice just trailed off again.
Yeah, I think he's a hematologist and a cardiologist. And
hematologist, is that blood? He specializes in diseases of the blood?
Yeah.
Okay.
So what he was saying is, look, and if you remember, about 8 weeks ago, I was really worked up about this, and I said, Trump should have a fireside chat, and he should just tell people, look, if you're at death's door, I think he could have saved tens of thousands of lives, maybe more, because instead of everybody being political and bashing him for highlighting this hydroxy, the fact of the matter is it saved a lot of people's lives. And it's the key. The secret is, look, you don't have to hear it from me. There's a letter. Read the letter that Dr. Zelenko sent to Trump. It's eye-opening, because he's not saying, I'm going to give you this if you're about to expire in a hospital. Your chances of turning that around are practically zero. But if you take what he's saying is, the earlier you take it, the first sign of symptoms, take it. What did I say before this virus, even hit the U.S. while it was still in China? Remember what I was saying? If anything with a vir on the end, VIR, has it's an antiviral basically, is probably going to, defend in some way, shape, or form against this virus getting inside you. Because once it gets into you, you're fighting it off becomes almost impossible. That's the problem. That's why there's 100,000 people dead today in the U.S. and 300, nearly 500,000 around the world. It's terrible. But I've been trying to say from day one to protect yourself, minimize the risk of being infected or letting this thing overwhelm you, because I explained that, because of the oxygenation of the blood, once your blood oxygen level starts going down, your chances of recovery go down percentage-wise, pretty much with the level of blood and oxygen in your blood. If you're down to 50%, you really are 50-50. That's the problem. And what this is a silent killer, because the virus is able, the brain is able to withstand the lower oxygen level, so it kind of doesn't alert the patient to a problem. So his vital organs are in danger, in jeopardy, the lower the oxygen rate gets. That's why the people who have got heart problems and stuff, or diabetics, are prone to succumb to this more rapidly and it can be real brutal on the kidneys, the liver, and the vital organs. So it's really, the number one thing is, look, nobody's immune from getting infected. We know that. But if you can somehow, repel this thing from taking hold of your body, your lungs, your vital organs, you've got a fighting chance of beating it. And I think if Trump had explained that to the people, I think because a lot of people don't, these poor people, who just suddenly, within a few hours or a few days, this thing gets into them, and by the time they get to the hospital, it's too late. I think a lot of people didn't understand the danger of this thing, the lethality of it, ahead of time. Obviously, I mean, more and more people are getting the memo right now. But what this doctor was saying is, we've been fighting the wrong battle. We've been fighting it in the hospitals. What he was saying is the hydroxy formula, the zinc, the hydroxy, and the zip, erythromycin, has a pretty good chance of keeping you out of the hospital.
Right.
It's an outpatient treatment, and that's what I was saying. They should have been handing it out on the street corner. Honest to God, I mean, would you rather? There's only two options: you're either dead, or maybe you got a fighting chance with something. And by the way, the other thing that I mentioned, ivermectin, there's some studies going on with that right now. This is one where it eliminates the virus in the lab right away. 48 hours, 99.8% eliminated. 72 hours, it's gone. And finally, they're starting to get some traction. So, again, that's another thing that could. I mean, listen, if it's death or something, you're crazy if you don't take something to prevent you, don't you think?
Absolutely.
I mean, look, it's up to the individual and it's up to the doctor, but the more, I think there's been a lack of education, there's been a lack of, overwhelming, monumental, worldwide response to this thing. Yes, these medical, the CDC and the World Health Organization and Fauci and people like that should have instead of being negative and being throwing cold water on all these things, they should have said, listen, wake up, take something to call your doctor, get some advice on how to defend against this thing. Plain and simple.
I agree.
It's tragic. It's really tragic that it got to this point. Anyway, the markets are definitely in danger here for a lot of reasons. Look, we got a double bottom on the VIXs. Oh, by the way, there was another one this morning. You might as well stick it up. SNOA.
Did I get that right?
Yeah.
Sonoma?
Yeah, correct. Yeah, this was a good trade too. That you could have bought it. Look, it's gone all the way up and all the way down in one
it did
day.
its thing all in.
Right.
Yeah, let's see how long it took it to do it. Let's drop down to a 1 minute chart.
And what?
Okay, so it gapped higher. So part of it, you didn't even have a chance to really participate in.
Yeah.
Unless you just happened to be already a shareholder, and then you woke up this morning.
I did call that one this morning. I said to a few people to get into it.
Christmas, but the earliest you could get into this thing was like $13. So
the thing about this one is, again, you got to do a bit of judgment on the merits of, whether it's deserving to be double it from overnight or whatever. And this one was a disinfectant that can kill the virus, and apparently the Australian government or somebody said they could use COVID-19 on the label as
well. COVID-19 let's see, COVID is on the back of a can of Lysol. I don't know if COVID-19 is on the back.
Corona, I think they said coronavirus, not COVID.
Okay, is that what it says on the back of the Lysol?
Yeah. But this is specifically addressing COVID. This particular, and so it actually had approval to say that it kills the COVID. That's what caused it to go from $6, $5 to $20.
I don't know that I've ever seen such an environment so ripe for pump and dump. And I'm not calling this stock a pump and dump. I'm just saying, with the world in lockdown, anybody that even remotely claims to have some kind of a cure, people are going to flock to it, especially the people, the Momo traders who just love to find these pump and dump schemes so that they can participate in them. And again, I'm not calling this stock or any stock we've looked at on this show a pump and dump. If I knew something was, I would never even bring it on the show. But you gotta, if you're trading stocks out there, especially penny stocks, lower price stocks, be very, very careful what you sink your money into. Please.
Yeah. What you have to, by the way, when you get these extremes, and we've had a few of them in the last few days, it usually is a warning sign that the highs are close to being in. And the second warning sign that a crash could be imminent is a stock announcement, like widely held stock. I'm just going to use Netflix as an example. I'm not saying anything like this would happen, because Netflix is almost like a safe haven right now.
Mm-hmm.
But let's just say, by the way, did you hear about Kylie Jenner? She was supposed to be the youngest woman billionaire ever.
Yes.
She fudged the numbers. I mean, can you believe that?
What?
Yeah, and that came out this morning. So what I'm saying is that if somebody fudges, well, it's like these Chinese stocks. For example, LK, right?
Inside Kylie Jenner's web of lies. Oh my.
Yeah. So that's really put a black this kind of credibility. The Kardashian family's gone down the tubes on that one.
So she sold half of her cosmetics company to Coty in a deal valued at $1.2 billion this January. And Forbes magazine, that's the same magazine that's publishing this article, declared in March 2019 that Kylie Jenner was indeed a billionaire, at least before the coronavirus. Kylie's a modern-day icon. Coty chairman Peter Harf gushed. But in the deal's fine print, a less flattering truth emerged. Filings released by publicly traded Coty over the past 6 months lay bare one of the family's best-kept secrets. Kylie's business is significantly smaller and less profitable than the family has spent years leading the cosmetics and media outlets, including Forbes, to believe. White lies, omissions, and outright fabrications are to be expected from the family that perfected, then monetized the concept of famous for being famous.
Of course, I had to get the Trump in there to stick the Trump.
Absolutely. Let's talk. Even with a cosmetic stock and a fake billionaire, we can find a reason to put a knife in the back of our president, who, as far as I know, is a legitimate billionaire. So, whatever. If they trot this Mark Cuban out for president, I may have to move. I don't know. I'm just kidding. I'm not going to move.
Yeah, they're giving him a bit of airtime lately.
Oh, it's coming. If it's not this election, he will have his. He'll have his run. I just feel it.
Yeah. If you can put up LK, Dwayne, LK.
Okay.
Yeah. I mean, look, this is a very interesting story, because this is there was a mania for this thing right up until February, right? I mean, I had people telling me this is like the Holy Grail and all the rest of it, and people swear by it, and then it sort of started going down, and then just around the 30 level, they came out that the numbers were all wrong. They were all that they were not.
Do you need to get that, John?
No, it's okay. I'll just let it. So hang on a second. Okay, sorry.
All right, guys, back to the recap. Okay, let me get back.
Okay, it's okay. Right. So but that LK, that's an example of a widely held stock getting cut in half. As it turns out, it was a great short. It went down because as soon as the news broke, it just fell away, and it's down in the $2 range or something right now.
John, I can barely hear you.
But an event like that can tank the market, or very often is a forerunner of a down market. So, maybe the next time, maybe when the earnings come out for this quarter in the summer, there could be some shock down moves. I mean, look, if you just take Apple, for example, we just hit 323. I think I mentioned I got some people out at 323 on the way down, on the way before the crash. And it got back to 323 yesterday. You have to ask yourself, what is Apple doing at 323 today, or 320, when it's like probably a fifth of production of where it was, probably a fifth of the sales potentially. I mean, this thing is an accident waiting to happen, don't you think?
Apple has the ability to somehow withstand and bounce back from every bad hand it's ever dealt. But
well, look, all I can tell you is Apple has been the bellwether of this rally for sure. If it gets into if there's another down gap like we had before, and we start thinking, it's going to pull the market down, possibly just as severely as the first down move.
This type of consolidation after this kind of a rally usually ends up with a pop.
Well, yeah, I mean, I'm not ruling that out. But I'm just saying, because I said if it drops down, when it breaks that up.
If it breaks down, and I agree with that 100%, because this whole rally that we've seen in the quote unquote markets, it's riding the back of like 4 or 5 stocks.
Right. If you could put up the TVIX. Okay, this basing out going on with the TVIX is a little bit like, what happened in February before the big liftoff, right? When we were saying to go long at 39.40 ahead of a move up to 1,000, 26 times, 26-fold move in a month, and can you believe it? In a month, can you believe that, Dwayne? So we didn't expect that to happen. We were looking, if you remember, we looked for 6 to 16 times upside. We got 26. This one right now, it's 150. I think is at least a six-fold. Well, call it 3 to 6-fold upside from here, I think. In other words, a rally back up to the 400, possibly 500 level. Something that can't be ruled out for this index. And as well as I do from our experience with dry ships and other things like that, there's always, when you have a parabolic up move, there's always either a dead cat bounce or a secondary up move of significance. I'm not saying, could we go to new highs on this thing? You can't rule that out. You have to keep that in mind. But certainly I think, some sort of a rally back up to 400, 500 is something that is distinctly possible.
And guys, you should be very careful trading something like this. This is a 2 times short type of a market. It's something for complex traders and investors. I mean, it's like telling a kid to go play in the street. You got to be very careful, because you can have momentum. You can have monumental gains or monumental losses at the drop of a hat.
Now, you got this conference call coming up, or press call coming up at 2:00 today. So it's hard to say. I was thinking about this yesterday, but when Trump schedules a call, in the last hour or two of the market, if it's going to talk about China, it's not a guaranteed short necessarily. Well, it could be, and if there's some intervention planned, the market he might put out the bad news. There might be a pullback, and then the market could rally. So you have to just use your normal trading, methodology if you're going to trade this afternoon. Don't assume that anything. I wouldn't assume anything, frankly, ahead of time.
And that's at 2:00, you say?
I believe so. Yeah.
Okay. All right. Yeah, that's something to watch for.
Yeah.
All right. Anything else you want to cover?
Well, hopefully everything will go well with the launch tomorrow, if it happens, and hope everybody has a nice weekend.
Hey, you too, John. Take care of yourself. Sure glad you're feeling better.
Bye-bye.
Talk to you next week.
Thank you. You too.
Okay, guys, important prices, important areas, almost always tested. The Russell, the alert. If you didn't have a chance to grab a screenshot earlier. 5, 4, 3, 2, 1. Okay. On the Russell, it was to sell $13.99. Okay, the first drop took us down to 94. So that's 5 points at $50 a point. That's $250 per contract traded. Then we get back above the trigger. Down we go again. This time we make it to 87. That's 12 points at $50 a point. That's $600 per contract traded. Then we get back above the trigger. We run into resistance at the BBC. This is just a beautiful thing. Down we go again. This time we make it down to, we'll just call that 1389.6. We'll round it up to 1390. So that's 9 points at $50 a point, $450 per contract traded. Then we get back above the trigger, where we once again run into the BBC, which we expect to be good resistance. All systems go. And this time we drop from 1399 down to 1370. So what's that? 28 points. Alexa, 28 times 50.
28 times 50 is 1,400.
So that's a $1,400 per contract trade. As I was explaining earlier, once you earn the right to trade 10 contracts, it becomes a $14,000 move. But you don't earn the right in another industry. You have to earn the right to go live in this industry. You earn the right to go live. You earn the right to add a second contract. You earn the right to add a third contract. And while that may seem like a slow boat to some, well, it only seems like a slow boat to those who are looking to get rich fast. And if you're looking to get rich fast, get rich quick, this is not the place for you. This is about building a business, not hitting the lottery. Two very different things. One you have control over, the other you don't. One is about lady luck. The other is a business based on probabilities and learning how to skew those probabilities in your favor with a very simple methodology. I mean, so $13.99, that's pretty simple, right? I mean, I don't want to oversimplify it. Then you get a chance to do it again and again and again. The Dow, which I did while John was talking, there was 1, 2, 3, 4 triggers there. The final one running down 380 points. Alexa, 380 times 5.
380 times 5 is 1,900.
So it's a $1,900 per contract move. Okay. What do we got left? NQ. Now, the NQ has been the troubled child all week long. The NQ, we wanted to be short 94.35. And that happened 94.35. Right across here. Right there. See that? 94.35. So we dropped below 94.35, what? 1, 2, 3, 4 times. And so from 94.35 just down to 9400, which all of them did, that's a 35-point move at $20 a point. That's $700 per contract traded. Crude, the alert last night was to be short 32.65, or to be long 34.40, which we have not seen yet. Okay, and from 32.65 32.65 down to 32.40. It's about $250 per contract traded available there. And then crude switched gears. It went back up to resistance, where it held for 2.5 hours. And then we got above the BBC. So this candle opened and closed above the BBC. So instead of looking for lower prices, now we're looking for higher prices. And what a beautiful trade this was. Price pulled back to the BBC. It held. The open of this candle, you go long at 33.30 up to 33.80. That's $500 per contract traded. And you haven't even gotten to the alert yet. See, when the market gives you these beautiful setups, you can trade into the alert, just like up back over here. Bearish cross, price pulled away, price pulled back, down close, get short. You had a chance to be short from 33.10 down to 32.70. So $400 per contract traded before the trade even before the alert even triggered. And as a member, you learn how to do all that. That's what we do. We teach how to do that. Okay, gold, last one. So they're being long 1737. 1737. Gold pays $100 per dollar of movement. So 1737 to 1747, that's $1,000 per contract traded. So this was about a $1,400 per contract move. How complicated was it? Well, you had to get long at 1737. That's how complicated it was. All right, good word for the day. Let my people go. That's what the man said. 1 John 2:19. They went out from us, but they were not of us. For if they had been of us, they would have continued with us. But they went out that they might be made manifest, that none of them were of us. Almost sounds like some kind of Dr. Seuss riddle, right? It's not. Every relationship in your life is for a reason and a season. Your commitment to your family should be for a lifetime, but other relationships may have term limits. So when someone walks away, don't try to talk them into staying with you, loving you, calling you, caring about you, coming to see you, or staying attached to you. Your destiny is not tied to those who leave you. John writes in 1 John, they went out from us, but they were not of us. For if they had been of us, they would no doubt have continued with us. But they went out that they might be made manifest that they were not all of us. People leave you because they're not joined to you. And if they're not joined to you, you shouldn't try to make them stay. This doesn't mean they're bad people. It just means that their part in your story is over. You've got to know when a relationship is over and graciously say goodbye, knowing that whatever relationships God means you to have, He will provide. Stop begging them to stay. Let them go. Clinging to a relationship whose season has ended will only lead to heartbreak. And a broken heart really hurts. After Lot left him, Abraham entered into a new level of God's blessing. Orpah left Naomi and went back to Moab. But Ruth stayed with Naomi, and they were both blessed by God. You've got to know who belongs in your life and who doesn't. If you're holding on to someone who doesn't belong, and who is not intended to be in your life, the word for you today is let them go. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.